Let's bring in Michelle Schneider, Chief Market Strategist at MarketGauge.com. Michelle, happy Monday. Great to see you. What are your thoughts? Is the latest trade move by Mr. Trump worrying equity markets? Is that the main factor here?
Well, that is one of the factors. There is somewhat, I think, of a level of the worst is over in terms of tariffs. A lot of people feel that whatever he threatens, he pulls back on. So I don't think the impact is as great as it would have been, at least from the street, in terms of equities. Obviously, the Russia-Ukraine news is also an impact here today. People are worried about that escalating. But I think more importantly, what we're seeing is, regardless of what the tariff policy is, what has already been set in motion. And Andrew, what we can see right now is commodities, which were kind of left for dead, minus, of course, gold, might be perking up here. And then what does that mean for everything, for equities, for Fed policy, and for the Trump administration?
That's interesting. Are you thinking about copper especially?
Well, I was looking at copper this morning, and it had a massive turnaround in the futures market so far today. That over 5 certainly looks interesting. Silver over $34 really is a breakout. Gold is approaching back to 3,400. And oil, as you had mentioned at the top, is the surprise, not to me, but it is a surprise, that along with natural gas, in that it's firmer. And so essentially what we're seeing here is that the demand for raw materials is great. The supply may not necessarily be as robust as people thought. And, you know, the old simple economics 101, supply demand, we know that what could be the spur. So even though OPEC Plus put out more barrels, we have a demand not just from AI and data centers, but we're approaching a summer season. You mentioned the fires in Canada. It's getting pretty hot here in the United States as well, especially where we live in the Southwest.
Mr. Trump's tariffs, of course, distorting the metals market, as you know. Aluminum prices for the actual users of aluminum in the Midwest of the United States, according to Bloomberg, are already paying a premium here with the prospect of fewer aluminum imports into the United States. It's not showing up, though, in the actual futures yet.
Well, right. And that's exactly what we've seen even with silver and copper, that the prices were sort of not really reflecting what we can see is happening, which is the rising demand. And of course, if you look at copper and aluminum and silver, and I haven't really looked at the wood prices yet, but if you look at all of that and then you look at the housing numbers right now, I saw today on Redfin numbers came out that the inventory is really, really high. Buyers have stepped away. And the mortgage rates, of course, hovering at around 7.5%, make it almost prohibitive for first-time home buyers. So, you know, this is where you have to look at not just stagflation, but we still have to look a little bit here at the potential of recession. And you can have recession and you can have hyperinflation at the same time. It's not fun or pretty, particularly for monetary policy, but it can be very profitable if an investor knows where to look.
Including possibly upside in commodities, Michelle?
Absolutely. I mean, we are already very bullish in gold and silver. I know we've talked before, and I've mentioned that over and over, probably for years at this point. But I think the fun could just be getting started. When people ask me the question, is it too late? My answer is no. What you really want to wait for right now is when the silver and the gold market go up, and instead of being met by sellers in the retail space, we start to see the buyers buying strength. And that's when commodities can go parabolic.
Let's have a look maybe at a 5-year chart for gold and then for the US dollar. US dollar near its lowest since 2023. And that, on the face of it, is great for gold.
Well, yeah, and that's also really interesting because if you look at a long-term chart, and I'm thinking about a monthly chart here, and you look at a 5 to 6 year business cycle, the dollar has broken down. So why is that significant? It's only done so twice in a very long time. 2011, which was when we had the downgrade and we had the government shutdown. And then, of course, 2020 when we had COVID. And the dollar came back very quickly from both of those, or at least over the course of months, not very long. Now it looks different. If this breakdown continues, you have to wonder. It may not have great velocity, but it doesn't have to. Just the erosion of the dollar, you have to ask why. And yes, of course, as you asked me, it is very bullish for commodities, and it's really not great for the consumer because it means your purchasing power goes way down with prices going up.
What are you seeing in retail right now, Michelle? Are there any equities that are catching your eye, for example?
Well, what's so interesting about the retail market is that it has been an underperformer for a very long time. That doesn't mean it's necessarily been weak, but it has definitely taken a backstage to tech and growth stocks and that whole buzz. But what we started to see last week, particularly in the beauty stocks, was that it was starting to really shine. Mm-hmm. So you had Ulta great earnings, e.l.f. great earnings, and both of those stocks rallied like crazy. So from a recession standpoint, they call that the lipstick trade because mm-hmm. people will go out and buy makeup regardless, and especially since it's relatively cheap compared to other things like mm-hmm. going on a vacation. But number two is the vanity trade is the coin I've used because we have an impact from diet drugs that just keep gaining in popularity with the eventuality that the price will come down. And what does that mean for the consumer? That means there's a tremendous number of people who, if they really have figured out how to lose weight and keep it off, will emerge into that beauty market and feel better about themselves. And then where does that go? Does it go into exercise and fitness, not just skincare? We saw Nu Skin have a great rally last week too. So I think regardless of what goes on, that's where my eyes are in that specific area of the retail space.
Thank you so much, Michelle. Really appreciate it.
Thank you so much, Andrew.
It is the one and only Michelle Schneider, Chief Strategist at MarketGauge.com.